Palantir earnings are arriving at a critical moment, as the stock could clearly benefit from a positive development to shift investor sentiment. For the first time in 2 years, shares of Palantir Technologies are not climbing ahead of a quarterly earnings announcement. This lack of momentum signals that investors are becoming more cautious and are finding fewer reasons to aggressively buy into what has become one of the most expensive stocks within the Standard & Poor's 500 index. Over recent months, the stock's performance has deteriorated noticeably. Shares of the software company have fallen by roughly 29% from their November peak, which was reached shortly before Palantir last released earnings results. That decline has continued into the new year, with the stock down more than 15% to start 2026. This places Palantir among the 15 weakest performers in the Standard & Poor's 500 index so far this year. While this sell-off has reduced some of the excess in Palantir's valuation, the stock remains richly priced. Shares are still trading at approximately 142 times expected earnings. Despite the elevated valuation, Wall Street continues to expect another strong quarter from the company. Analysts covering Palantir believe adjusted earnings per share will rise by 63%, reaching 23 cents in the final quarter of 2025. At the same time, revenue is expected to climb to $1.3 billion, reflecting a year-over-year increase of 61%. These figures suggest that while the stock price has weakened, the underlying business is still anticipated to deliver meaningful growth. Investor expectations, however, have become more demanding. Market participants are increasingly focused on tangible results and reasonable valuations that make investments genuinely attractive. Even with this cautious stance, Palantir shares were modestly higher in early Monday trading, rising by about 2%. As Palantir prepares to report earnings, it does so amid a broader shift in market sentiment toward large technology companies. Investors have grown more skeptical about the massive spending required to build artificial intelligence infrastructure and are now demanding clearer evidence of returns on that investment. This change in attitude has weighed heavily on technology stocks overall. Traders have begun shifting their focus away from the earliest beneficiaries of the artificial intelligence boom and toward companies that stand to profit from the billions of dollars being committed by hyperscale operators such as Amazon, Alphabet, and Microsoft. At the same time, companies perceived as being negatively impacted by artificial intelligence adoption, including many software firms, have seen their share prices pressured. This broader environment places additional stress on Palantir to deliver forward guidance that not only meets expectations, but exceeds them. Investors want proof that the company's premium valuation is justified. Still, not everyone views the recent pullback as a negative development. Chief Investment Officer at a research affiliates suggested that the decline from the late October peak may be a healthy sign. The current valuation could indicate that the company is gradually growing into investor expectations rather than investors inflating their hopes to unrealistic levels. From a technical analysis standpoint, the recent sell-off could actually provide some near-term upside potential. Palantir shares are approaching oversold territory after dropping below their 50-day, 100-day, and 200-day moving averages. These levels are closely watched by traders and often act as important indicators of momentum. Jake Bean, head of capital markets at Direxion, noted that there appear to be smaller areas of support forming at these lower levels, which could help stabilize the stock if buying interest returns. The upcoming earnings release itself is likely to play a decisive role in determining the stock's direction. Palantir is scheduled to report earnings after the market closes on Monday, and the results will set the tone for investor reaction. Gil Luria of D.A. Davidson stated that there is no clear reason to expect a weak quarter from Palantir, as nothing during the current period suggests a slowdown in the business. However, Luria also emphasized that expectations have been set extremely high. After several consecutive quarters of impressive performance, the company now faces a difficult challenge in clearing the elevated bar it has established for itself. If Palantir can deliver strong growth in several key areas, it could help reignite the powerful rally seen last year when the stock surged by 135%. One of the most important components of Palantir's business remains its government contracts, which account for more than half of total revenue. This segment is expected to grow by more than 50% compared with the same quarter 1 year earlier, highlighting continued strength in public sector demand. Beyond government contracts, investors are paying close attention to Palantir's progress in expanding its commercial customer base. Analysts anticipate that revenue from the United States segment will approach $650 million in the fourth quarter. This would represent growth of more than 70% year over year, underscoring accelerating adoption among domestic commercial clients. Even with this expected strength, investor enthusiasm may remain muted if the broader mood towards software stocks does not improve. Recent earnings results from other major technology companies companies have not helped sentiment. Shares of Microsoft and ServiceNow declined following their own earnings announcements, putting additional pressure on the broader market. These reactions have made investors more cautious and less willing to give software companies the benefit of the doubt, even when results are solid. Joe Tigay of Equity Armor Investments explained that to avoid the sharp emotional sell-offs seen in other software names, Palantir may need to deliver a clear earnings beat along with guidance that meets or exceeds market expectations. That if the company provides a conservative outlook, investors are unlikely to aggressively bid the stock higher, regardless of recent valuation declines. One potential catalyst during the earnings release could come from commentary provided by Palantir's leadership. Jake Bean noted that Palantir Chief Executive Officer Alex Karp is widely known for his energetic and enthusiastic promotion of the company's vision and progress. Bean suggested that it would be surprising if Karp failed to rally at least some buyers, no matter what the earnings report ultimately reveals. Stepping back to look at the broader technology landscape, the massive scale of investment required to support artificial intelligence growth is becoming increasingly clear. Oracle recently announced plans to raise between $45 billion and $50 billion this year through a combination of debt and equity offerings. The goal is to expand cloud infrastructure capacity, underscoring just how much capital is needed to sustain the rapid expansion of artificial intelligence technologies across the industry. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.